All right, guys, this party ain't over yet, is it? One more day left this week. OPEX is right around the corner. It's time to get back to work Thursday evening. It's May the 20th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow, not just any Friday, OPEX Friday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the S&P, the Nasdaq, and the gold. Oh yeah, that yellow metal is on our radar for OPEX Friday's trading session. I got a bunch of great trades I'm tracking for tomorrow. Got some strong trends. Got some nice short squeezes on the Eminis. The Nasdaq and the S&P are all very, very bullish right now. I'd love to buy some pullbacks, fade some breakouts, and maybe grab some reversals on the S&P. Over in the gold, though, gold is range bound. It's trying to break out higher right now, but there's that big multi-day range right below it. So we're buying low, we're selling high. I've got a couple really nice failure setups, some fake out breakouts I've got on my radar for tomorrow. By the end of this video tonight, you'll know exactly my favorite trades for OPEX Friday, and I'll make sure you know how to capitalize on them either with us in the trade room or tomorrow on your own. Before we jump in, though, and get the video going tonight, I just want to make sure to remind you, I publish this video newsletter every evening during the week with my best trade ideas for the following day. Make sure you subscribe to our YouTube channel so you don't miss, not tomorrow night's, but Monday evening's nightly newsletter. So make sure you subscribe. That way you don't miss all the good stuff on this channel. And don't forget, if you guys have any questions for me, you can always drop those questions for me. I'd love to answer all your questions. So don't be shy. Post those questions for me in the comment section. And guys, I appreciate you carving out some time with me every evening during the week. If you enjoyed this video as much as I enjoy making it for you guys every evening, do me a big favor. Hit that like button, that thumbs up button. And again, don't forget to subscribe. I don't want you to miss next week's series of videos. All right, enough of the introduction, though. Friday is right around the corner. Let's get this party going. Charts are ready. I'm glad to see you guys are ready here as well. S&P, Nasdaq, gold on our radar. A lot of things look, well, obviously, the S&P and the Nasdaq right now are very bullish. S&P is really bullish into a range right now. Nasdaq is bullish with a trend right now. And the gold, again, the gold might look bullish at first, but we get that range right above us. On the E-minis are relatively straightforward. I'd like to buy some pullbacks on the S&P, some pullbacks on the Nasdaq. We'll also talk about some reversals because, as you've seen, we've been up and down and all over the place on the E-mini. So we'd love to buy some pullbacks, but I would definitely be open-minded to a reversal, either off the tops or the bottoms of these ranges for tomorrow. And again, get some great short trades I'm tracking on the gold for tomorrow. I'm not afraid to buy the gold right now, but you'll see in a second when you get into gold here, there's just not a lot of options up there to be a buyer right now on gold. I would love to buy down here. I'd love to buy that low on gold. Not to worry, we're going to cover all the details tonight in this video. But before we jump in, though, and get into these charts, though, let's just make sure we're both on the same page here because tomorrow is a Friday. Fridays are always early in, early out, right? So, you're not going to have a whole day of trading tomorrow. I always tell my clients, you've got to have a good reason to be trading after 11 o'clock Eastern time on a Friday morning. So just be aware of that, right? Keep your lunch plans tomorrow because usually the best setups are going to be in the morning session. And also, too, you don't want to get to the desk late tomorrow because we got some Fed speakers tomorrow. And as I mentioned earlier this week, everybody's been obsessed with what? Inflation, interest rates, the Fed, stimulus. So we've been talking about this all week. We've really been paying close attention this week to all of the Fed speakers, right? We saw Fed speakers on Monday, Tuesday, Wednesday. We had a break from those yesterday, but you can see tomorrow morning, though, we've got Kaplan speaking at 9:15. Apparently, he's speaking twice tomorrow, 15 minutes back to back. But that is definitely going to be something you'll want to be paying attention to tomorrow morning here. Remember, what we're listening in for on these Fed speakers is we're listening in for them talking about inflation. Right now, anytime a Fed speaker mentions the word inflation, all the algos, all the trading programs, it feels like they are programmed to freak out every time somebody says inflation that is a Fed speaker, right? So tomorrow, tomorrow, we'll be listening in for inflation, tapering, stimulus, stuff like that. Those keywords tomorrow morning in those speeches. Again, this time from Kaplan at 9:15 and apparently again at 9:30. So we definitely don't want to be late tomorrow to the trade room at 8 o'clock Eastern time, that we can have a front row seat for that. Not the announcement, right, but the speech happening at 9:15. And then later on in the morning, really some of the biggest news of the week tomorrow, right? OPEX Friday is not slowing down. We've got PMIs, right? The Purchasing Managers Index. Now, PMI number, CPI, PPI, PMI, right? All these indexes, they all track, you guessed it, our favorite word right now, right? Inflation, right? They all track that number. So that is going to be a big, big hot button here for tomorrow. And as I mentioned earlier on this week, the housing market here, at least in the U.S., has been, well, some might say it's been hot. Some might say it's overheated, right? So everybody's watching these numbers right now. The existing home sales number will be interesting this week or tomorrow morning, because remember, last week, we saw a record-breaking housing number, but then this week, though, it was a really disappointing housing starts, right? That housing starts number is a leading indicator. So, long story short, I'm not going to go too far down that rabbit hole, but existing home sales, right? These are homes that are already built. Are those going to drop tomorrow as well, right? We saw a pullback on the housing starts this week. Will we see this red-hot housing market, at least here in the U.S., will we see it start to show signs of weakness? I'll tell you right now, we could really see a busy day tomorrow in the markets. And let's not forget, right? Tomorrow's OPEX too, which means, we're trading futures, right? I'm not trading options, at least not in our trade room here at School of Trade. But, we do expect option expiration to have some extra volatility as we go into the end of the week. I know that futures don't expire tomorrow, at least not the ones we trade, right? But options, of course, they'll use the futures markets as hedging purposes, yada, yada, yada. So we do know there's going to be potentially some very good volatility as we go into the end of the week. So as you can tell, I'm pretty excited for tomorrow's trading session. We got a Fed speaker, we got some inflation numbers, we get some housing number. I mean, that is the kind of the trifecta of potential market moving events tomorrow morning. Just remember though, get there early, get there on time tomorrow. We'll be in our trade room. Don't forget, every morning, 8 o'clock Eastern time. I would love to have you there trading right along with us at the opening bell. I'll put all the membership information you guys need, the description of this YouTube video, or I'll put a big button for you to follow at the bottom of the video on our trading blog, right? So grab that. But now you guys know, right? Don't miss tomorrow. Tomorrow has potential to be a very, very busy day. All right, let's get some charts going here, though. You guys didn't come here to talk about the news. We came to talk about the charts and the best trades for tomorrow. S&P's ready. Nasdaq's ready. Gold is ready. Everything is pretty much bullish right now. S&P, of course, and Nasdaq are uber bullish. Let's talk about the S&P first of all. You don't need me to tell you the bulls have control right now, right? This is definitely a bull market, a massive short squeeze or short covering rally off of that big down day that we saw yesterday. So buyers come in, they gobble up all the discounted prices, and the market slams higher here. The most important takeaway for the S&P is it's looking like a trading range right now. It looks like a range. It's obviously potentially a spike in channel here, but it does look like it's a range, and that would make sense, right? Anytime you see a market make these big moves higher, a lot of times the following day is a trading range, right? My clients always ask me, how do you anticipate when a range will show up? Because ranges will show up right when you least expect them. Usually after a big move, not necessarily a strong move, but after a big move, the following day will oftentimes kind of catch its breath, tread water, and go sideways. It does look like that is the case right now. So if I have a range-bound market, that range right in the middle acts like a magnet. The two basic setups, the two best trades on a range-bound market are going to be failure trades and breakout trades, right? So basically, failures, you want to find levels of support below the range, because after all, we're bullish overall, and look for what I call a failure setup off the low of that trading range. Same thing goes above, right? As we go higher here, failure setups off the high to sell back down into that trading range. Those are kind of my bread and butter whenever I have a range bound market. The next thing would be breakouts, right? Because breakouts are, well, let's put it this way. It's very difficult to predict or time a breakout, but breakouts are likely in a range bound market. I like to use what I call a 1, 2, 3 breakout pattern, which is just like it sounds, right? Strong move down, 1, pull back to the moving average, 2, and 3 is a breakout of the trading range, 1, 2, 3 breakout, or going higher, 1, 2, 3 breakout, right? Going higher out of that range as well. So we'll definitely be looking for those breakouts as well here. Now, if I take a quick step back here for a second, you can kind of see where we are, right? We've got a big level of resistance here overhead. That's not the all-time high. The all-time high is a little bit higher, right? 4240. So as you can see here, if they can get a breakout going, 4200, all-time highs. I don't know if I dare say all-time highs, but hey, Fed speaker tomorrow, inflation report tomorrow, housing report tomorrow. So it's definitely not out of the question for a range breakout. If the bears were to break out of this range, you can really see that range back here, right? Remember, ranges act like magnets, that 4100, 4084. And if the you-know-what really hits the fan tomorrow, take out those lows at 4055. That does seem a bit unrealistic for tomorrow, but hey, we've seen crazier stuff this week, that's for sure. So, all right, let's talk about where I would like to get my trades on for tomorrow. That way you kind of know what I'll be looking for tomorrow in the trade room. The big thing right now is we're bullish. Right? I'd like to buy, basically buy a pullback, right? That's basically what we're trying to do here. Trying to buy pullbacks. Now, you'll notice I have the pendulum swing on here. And the pendulum swing is a pretty simple idea. Ranges are balanced markets. So imagine there's a kind of a balanced pendulum right there, right? The market swings up. It'll usually swing down and take out that low down there, and that's where I can buy it back up again. My favorite trade for tomorrow would be to complete this pendulum swing, right? Maybe not. And of course, the thing about pendulum swings is it doesn't need to be exact. I'd like to be down in this area, right? That 41.39, 41.40 area. I'd like to get down into that area. Now, I know we're very bullish, but when we rotate off the high of a range like that, and the market rotates all the way down, it's going to be a little bit more bearish. It is, right? The bears they're going to put up a fight down there, right? So once we get down there, the bears will now most likely start to put up a fight because, again, it's going to look very bearish right now. So my favorite trade tomorrow would be a failure pattern, but it's a little bit more patient of a failure pattern. Let's call it that, right? Bears try once. Bears try twice, and then once we got those bears kind of locked into their short positions, we now know exactly where their stops are, and we can buy right into those stop losses. Now, there's a couple different ways I can take this trade. One of my favorite ways to do it is off a trend line, right? So trend line is a great way to do it. And sometimes, I'll be honest, sometimes we don't have that trend line to work with, or it just doesn't hit it. And of course, we'll have to buy into those stop losses. Also, keep in mind too, a lot of times when you get these, what I call failure patterns, this would be a nested failure. A lot of times when you get these things trapping in all those bears, it'll really rip higher. And when it does, it's very tempting to want to chase after it. But remember, you don't want to chase it going higher. You want to look for traps. So kind of a follow-up setup after that, again, failure, right? After that failure will be a trap setup. And you know what I always remind you guys, right? Think about that channel. New high right there, new low right there. Not required, right? But certainly not going to hurt. So a failure, trap combination, right back up to retest the high. I'll tell you right now, though, if we can get this thing going off that low, that weekend gap, at 41.73, that's the easy target now if we can get long here right off of those lows. That's kind of my first favorite setup here for tomorrow on the S&P 500. Now, keep in mind, it may go a little bit lower than that. You know what I mean? It may go deeper into this area, but that's what I'm looking for as we go. Now, let's face it, it's a very strong trend. I can easily draw that channel. I can easily draw that, right, find that channel here. So is there any reason why I couldn't just buy the low of this channel? You're absolutely right. There's no reason why we can't do that. What I do have to worry about, though, is trading too close to that channel. So my next favorite setup would be a trap entry, 1, 2, trap off the low. Or if I can take out these lows down here, right, that 43 3/4, same idea, right? Take out that 43 3/4, 1, 2, trap entry. Remember, I want traps because I want to avoid, well, in the first example, I'm concerned about the rotation back down again, so I want to be a little more conservative on the entry there. On the second example, though, I want to use a trap entry to avoid trading inside of that range, right? So again, deep pullback, nested failure, shallow pullback, trap entry. Now we're talking, right? Those are my two favorite buy setups here as we pull back. Now, let's say, for example, this market rolls higher, right? We get the 1, 2, we go right up here. How do I trade a breakout, right? Because it's a range, so breakouts are definitely on our radar right now. What a breakout look like the upside? Again, we've got to see a relatively strong move first. But remember, though, strong moves are no guarantee of a breakout. They have to actually hold that pullback. Now, once they hold that pullback and we get that strong jump off the moving average, again, we call these what? 1, 2, 3 breakouts. Once again, I'm not going to buy the first pullback, right? Because if you buy that first pullback, that means you're buying this one, you're buying this one. Not a very reliable strategy buying that first pullback. Not after such a big move. Wait for that 1, 2, 3 breakout. Mark up that high, mark up that low, and then what I'm doing is I'm going to throw whatever pattern, whatever entry setup I can get off that. I want to buy the low of that new hidden channel. We call these 1, 2, 3 breakouts into hidden channel pullbacks. Now, when I say pullback, I'm usually not getting a pullback off the low of that channel, right? This is a 7,000 tick chart there. I'm going to drill down to a 1,000 tick chart. And my two favorite entry techniques off that low are bear traps, for sure, and seller failures. Those are the two most common entry triggers off the low of that breakout channel. I'm not going to go over those smaller details right now, but I would gladly give you all the details, though, as part of our free trading class. I can go into a lot more deeper dive into those entry techniques. So what I'll do is I'll put a little link up there for you. In the upper right-hand corner, grab that little button that popped up there, grab the registration to the free trading course on our website. You'll see hundreds of examples of how we apply our favorite entry techniques to our favorite futures markets. You'll love it. You'll love it. You'll in the entire strategy, my favorite entry setups. You'll love it. So grab that free course. That way, the next time I say 1, 2, 3 breakout, right? Because that's what the breakout looks like downside. Mark up that low, mark up that high. And again, we're looking for whatever, right? Whichever entry setup I can get off the high of that trading range, off the high of that channel, right? Makes sense? So again, how do we trade the reversal? How do we trade the breakout? It's the 1, 2, 3, right? 1, 2, 3 move. That will break free of that range. And we're looking at short off the high of that channel. Again, as I mentioned before, keep your eyes on that round number tomorrow if the bears take control. And honestly, that round number above, it seems crazy, right? But that round number above, if the bulls can get a breakout out of this. Now, of course, we are also going to have a bunch of other reversal potential opportunities. I could easily see this thing go down, take out those highs tomorrow, and then maybe a crown reversal, right? A 1, a 2, find that trend line, find that channel, right? We talk about these quite a bit. So there's going to be a lot more, there's obviously, there's dozens of different ways we can trade this tomorrow. So if we do get that, that deep pullback, get that failure off the low, we take out those highs, I have no problem shorting off that high, again, because that range will still be there. But of course, if it does hold and go 1, 2, 3 breakout, right, into hidden channel pullback. Again, I'm sure I've missed something here on the S&P, but not to worry. Tomorrow morning, come join us in the trade room, and I'll make sure you know exactly where the best stuff is, right, nonstop tomorrow morning. Let's keep going here. Nasdaq's got my name on it. Now, the Nasdaq, really, there's not a lot on this chart right now, right? The day begins as a bit of a range, and well, again, unless you've been living under a rock the last couple hours, it's a very bull market. It is a classic short squeeze, right? We had that big down day or down days earlier on this week, right? The bears, of course, take it lower, and this thing just whoops. Well, of course, what happened was, right, we ended up giving back most of those losses, right, on Wednesday, and that sends us into a range environment, and they ripped it, right? Just ripped it right back up to retest those highs. What I think is very, very important for tomorrow is you can see that big rectangle right above us here. Yeah, if I look left here, and this, you can see this a little better in a slower time frame, but there's a big old range up there, and you know what ranges are? They're magnets, and so we definitely have the high of that range, 57, 571, something like that. But I'll tell you, if they can crack above that area, there is a wide open space, and you can see potentially a pendulum. I mean, obviously this will be a little unrealistic for tomorrow, but again, you got some resistance up top here at the high of that range, and you got that big top up there, 13, 18 and change up there. Again, might not happen all tomorrow, but there's a lot of blue skies, as the kids say these days, right, up above us here. Now, of course, if the bears, if they get their hooks in this thing, we know this will probably come right back down to where the day began, right? So that will be the bear target down to that 13,150 area. I doubt we go all the way to 13,000 tomorrow, but would I be surprised? Probably not. No, probably not. It wouldn't surprise me one bit these days, right? Which we love about these markets right now. Love the volatility. So, anyways, we are bullish. We are trending. Now, let's face it here. Anytime we see a big move like this in one day, there's a very good chance tomorrow is a range-bound market. It may be a relatively sleepy range-bound market until we get a Fed speaker, until we get some inflation report, you know what I mean? Until we get some of those catalysts. So it definitely you can see I'm kind of anticipating there'll be a range there. And remember, at any moment when you start seeing those double tops, those double bottoms, it's a bull market. What do you do when a market's bullish into a range? That's right. You find levels of support below the range, and what do? You combine those levels of support with a failure pattern. Okay, what I tell my clients, and they probably are sick and tired of me talking like this in the trade room, but I say it over and over again in the trade room because repetition, we try to build that, that muscle memory, find support levels below the range and buy those failures. That's exactly the same type of strategy we're using in the S&P. They'll do the exact same thing for tomorrow. So if we start seeing it go sideways here on the Nasdaq, think about that strategy I gave you guys on the S&P, and that's going to be pretty much copy and paste over here on the Nasdaq. So right now, it's just speculation. It is very much just, again, trending market. When I have a trending market, I'm buying pullbacks, right, or continuation trades, and I'm buying reversals or trading reversals, if you will. Okay, so where would the best pullback be? You can probably make a guess of kind of where that pullback is going to be right now. What I would love to get, like what my kind of dream come true scenario here would be, get down into this really, this buy zone, if you will, down here, right? That 13,400, 13,380 area. We may not get that, right? May not get that much of a pullback. We may have to use the low, right, of this channel. So I want to buy a pullback. The one thing you can kind of see what's happening right now, though, is the market is kind of stair-stepping lower here, right? See how it's kind of stair-stepping lower here? What you want to do is I wouldn't say my favorite setup, but my favorite would be getting a really deep pullback, right? Give us a chance to really buy low. But you know what's going to happen, right? If you get that really deep pullback, those bears, they're going to attack this thing, right? They're going to say, we're going back down again, right? And they might be right. So if we do get that really deep pullback, if you're a client of mine, right? This is a spiking channel. And so the base of that channel, right? The base of that channel, don't be surprised if this thing takes a nosedive overnight, runs right into the base of that channel and just 1, 2, and whoop, right back up again, because buyers would love to buy the dip right now, because let's face it, there was really no pullbacks on the Nasdaq, right? Lots of on the S&P today, but really not much on the Nasdaq here. So my favorite setup would be that really deep pullback. Get those bears, just at the S&P, right? Get the bears trying a couple times down here. Once we do that, our stops are hanging out right above those highs. Again, I'm going to try to buy right into the stop losses of those sellers, because there's no easier money to make in a bull market than trapping in those bears and using those stops as fuel. Now, don't forget, right? Draw that trend line. I can trap the trend line. I can buy into stop losses. And as we go higher, remember, don't chase it, right? Don't chase it. Look for those trap entries as the market races higher, right? It's a failure. Again, can I buy off a trend line? Can I buy that failure there? Get that trap, right? Those are always going to be on our radar for those deep pullbacks. That was my favorite setup right here for tomorrow. I'm also watching for a drop back down to this area. Now, if that happens, the big challenge we're going to have, as I mentioned earlier, is we've got this thing kind of stair-stepping its way lower. Now, these are pretty easy, right? These are pretty easy. What we're going to do is we're going to draw that trend line down and then get up and over, right? Up and over, right? We call these two-legged pullbacks. I do understand it could be 1, 2, 3. It could be 4 or 5 legs for all I care, really. But you can see that trend line come down, try to get, remember, up and over, right? Up and over. What you don't want on this setup, right, is you don't want, right? You don't want it to grind down. All right? That's what you don't want. The grind is no good. What you want on these, what I call two-legged pullbacks, is up and over and in, right? What I tell my clients is you want to see some daylight in between that trend line and the entry. Nice strong green candle, right? Buying off that trend line, or buying off the low of that channel. I just wanted to go up, over, and go. That will be another one of my favorites. Now, a little side note on that is sometimes what happens is the market will go and it won't pull all the way back. If that happens and things start to run, traps, baby, right? Traps are your green light there. Again, if it runs, does not pull back for us, little side note there, right? Kind of a backup entry is that trap. I use traps. Remember, I use traps whenever I'm concerned about buying high. And that's exactly what the problem will be right there, right? Buying too close to those highs here. So now we have a pretty good idea of how I would trade a pullback right now, kind of a continuation trade on this market. Now, how do we trade reversals? Or really, how do we trade if the market keeps going higher? If the market keeps on going higher here, if we keep on grinding higher here, there's really not a lot of a different, the strategy pretty much stays the same. I still have a bull market, except now if we keep grinding higher, now I'm not so worried about that trend line. You can see the trend line right there, right? You can see it coming down already. So let's just say, for example, if the market was to, again, kind of start, just kind of rolling higher here, this is a spike in channel. And spike in channels, they love to pull back right around those prior swings. So just wait for the pullback, wait for those bears to get roped in, wait for them to get short. And then in this situation, it's not a very deep pullback, right? Again, price keeps going higher, kind of grinds higher there. Wait for that failure, and then see if you can grab that pullback combination. These are very, very common. I talk a lot about this in the free trading class, right? That failure into pullback combination, right? So if we do keep going higher here, which wouldn't surprise us, it shouldn't surprise us tomorrow. Again, they're going to complete that short squeeze. If we do keep going higher, wait for that pullback. Now, as far as it really jumping, right? And this, of course, would also apply to the S&P tomorrow. Let's just say for some reason, right, the market opens up and this thing just blasts, right? 1, 2, 3, move, mark that high, mark that low, right? Buy that. Again, first test is the best test. We're not simply buying that low, right? Using bear traps, using seller failures. Again, this is a 4,000 tick chart, right? I'll go down to an 800 tick chart for the entry time frame and time the entries off the low of that channel. 1, 2, 3 breakout into hidden channel pullback. Again, you'll learn all those small details of those entry setups in the free trading class linked up there in the upper right-hand corner, right? Or if it runs higher here, right? Strong move up, shallow pullback, higher high in price, traps, baby. another one of my favorites. And again, this will also apply to the S&P. Right, a lot of the Nasdaq and the S&P right now can be interchanged, right? So just like the S&P, right? S&P's a range right now, but if it really jumps, right, I can grab this pattern too, right? Remember, it's a strong move up, a shallow pullback, a higher high, right? I always say to my clients, right? Say it with me: strong move, shallow pullback, higher high, traps, baby, right? Traps. And again, doesn't hurt. This isn't required, but if you can grab a channel off that, oh my goodness, right? Just give me the money now, right? It's like a robbery, for crying out loud, right? Very, very. I mean that in the nicest way, of course. I'm having fun with you guys, right? But that's a great setup as we go higher here. So again, don't be afraid if we keep going higher. Just again, don't buy the breakout, right? Wait for it to confirm either a 2-try breakout like this, right, or a 1, 2, 3 breakout, as I mentioned many times before. All right. Everybody wants to know, how do we trade the reversal? There are kind of two ways that I would say trade the reversal right now. The big problem we have right now is we're not at a major turning point. We're not there yet, right? If we were at a major turning point up here, I would say a crown reversal. Right, a crown reversal would be effective at a major turning point, right? Crown reversals are simply 1 try for the buyers, 2 try for the buyers, and back down again. We're not really at a major turning point right now. If we get, let's say, up to these areas here, right, and then we see 1 try for the buyers, 2 try for the buyers, mark that low, mark that high, right? Yeah, that will work. But we're not there yet, though, right? We're not there yet. So as far as calling a top on this, not too keen on calling a top on a market this red hot. We may get either a 1, 2, 3 reversal or a bounce reversal. So let's imagine now, right? We pull back, we get that failure into pullback combination. We go right back up. We retest the high. Now we have a top to work with. Right? Now what do? Now I look for what I kind of call a bounce reversal, right? Which is basically where we pull back, we use our failures to get in, we retest that high, and now what happens is the market just simply runs 1, 2, 3 off of that high, right? So we pull back, we retest the highs, the buyers make their money buying low. We've talked about those pattern setups already. And then what happens? We see a strong move off the high, the bears hold the pullback, right? And they run, right? What do we call that? 1, 2, 3 reversal, right? I call it a bounce reversal because it kind of bounces off that high, right? You know the buyers have control. We're able to buy off that low. They bounce off the high. We're not going to sell that high. Again, we're not at a major turning point right now. That's the key. Again, if we're way up here, different story. But right now, though, we're not there yet. If they do bounce off that top, 1, 2, 3, and go, I'm not selling the first one. Again, that is a very not dangerous, but it's a low probability trade. We got to be more patient for better trades. Follow that, right? Follow that low, find that high. Remember, the first test is the best test, right? The first test is the best test. 1, 2, 3 into first pullback. Again, bull traps, buyer failures. Grab the free course and learn more about those. We may also see it something like this, right? Where it rolls, it does not pull back, it runs lower. What's that called? 1, 2, 3, right? Strong. Remember, say it with me. Strong move, shallow pullback, lower low in price, right? Trap high. So lots of that would be a great trade. That's a great trade. Again, it's not going to happen, overnight, right? It'll happen tomorrow morning sometimes. We go up, we bounce off the high, we get that reversal. The reversal turns into a trap high off that. That's a gorgeous setup, right? Everybody will be hitting that thing with a full-size position if we can get it, right? And then, of course, if we don't, right? Let's say we do pull back. Let's say the bears are done with this or the bulls are done with this. They hold that and they break. Right? 1, 2, 3 reversal, same thing. Mark that low, mark that high, right? And again, pardon my scribbles, right? Sell short off that high. Bull traps, buyer failures. Again, 1, 2, 3 reversal, right? A trending market, whatever you do, don't try picking a top in a market like this right now. Buyers are waiting to buy those dips. Maybe we do see a reversal, but wait for it, right? Wait for proof, right? We definitely can anticipate, but we definitely always want to wait for proof of that reversal. Let's keep going here. How about some gold? Let's wrap this thing up here now. Right, on that yellow metal. Looking at gold here, gold is Gold is definitely one of the more, what's the word here? Kind of the more entertaining markets as we go into tomorrow. The key takeaway right now on gold is it's a range. And it's not just a range from today. It's a range, well, from quite a while ago, right? It's a pretty big range here. So that range, call it this area right here, right? That range again is acting as a magnet. We've got the pendulum swing below, the pendulum swing above, and really the more you look at this chart right now, there really isn't a lot of easy ways to get long, right? Because the range below us is a magnet. We've got major highs major highs overhead here. Yes, we are we're not very bullish. We're definitely more bullish right now than we are bearish. But again, not very easy for me to be a buyer on this. So again, kind of an interesting chart here. The range is the magnet. We are definitely bullish, right? Because you can definitely see this market is making higher highs. The biggest thing right now is look at the strength of that last move, right? That last move, that is no slouch. That is a relatively strong leg higher there. And so, anytime we see a strong move in one direction, we know there's a good chance it's going to retest that high, and that may result in that big breakaway move here. So we'll see. We'll see what happens. My favorite trades for tomorrow, there's a lot of ways that I could trade this right now. I think my favorite trade for tomorrow would be a 2-try trap. Again, use the range as a magnet. I want to buy low. I want to sell high. Let me clean this off here right now. Right? So again, anytime we see a range, we're focused on failures and we're watching for breakouts, right? So failures and breakouts. Failures are the easy money when it comes to ranges. My biggest problem right now is I got to be careful because of that big strong move higher. This could easily be a failure and rip right back higher again right now. So I got to be careful. I don't want to get too aggressive on that short. What I like to do is knowing the buyers, right? Knowing the buyers are looking out there, or they're kind of hanging out there. I would love to see another lower low and get that short off that high. Not necessarily the high of that channel. It definitely wouldn't hurt though. Right? That is a great looking short setup right there. Love that trade. That's probably my favorite trade, right, to take there for tomorrow. Again, it's a strong move down, a shallow pullback, a lower low in price. We've talked about this pattern many times before tonight, right? 1, 2, go. Find that trap, baby, right? And sell that trap off the high. The range is the magnet. We give the buyers the benefit of the doubt, right? Let them try once, let them try twice. It ticks all the boxes. We're able to sell at resistance, use the range as the magnet. And the target on this is pretty good too because you can measure the amount above the range, bring it down. You've got that big low, that pendulum swing. Just a great, great opportunity to sell short here on the gold. The next kind of favorite trade would be if we do end up all the way down into these lows here. Again, don't forget, this range is not going anywhere, right? That range will still be now above us. So if the market was to, let's say, collapse and roll lower now, is this now a bear market? It is, but remember that range is well above us here, acting as a magnet. You know me, I want to buy low at support, right? Take out those lows. Really anywhere down in this area will suffice. What's my concern though? My concern is momentum, right? We're too bearish just to step into it. What I'll do is I'll look for something like this. Strong move down, bears try once, bears try twice, and then let her rip from there, right? Same idea. We finish off the move back down to those lows. The bears come in, they try once, they try twice. Their stops are just sitting there begging to be picked off, right? I can draw a trend line off that low. I can buy into those stop losses. Again, keep your eyes on those traps, right? As the market races higher. These are failure setups because it's a range. Focus on failures, trap setups as we try to finish off that rotation back in the opposite direction. So that's my second favorite setup for tomorrow. I would love to buy off of that low. Here's another one to keep your eyes on, and this will be pretty much anything up here, anything really in this whole area up here is definitely ripe for this trade here. I've got these marked up in two separate spots. Again, we have this strong move higher here for the gold, for the buyers. I would not be surprised whatsoever if you see this thing pull back and retest that high. Okay, we call these in my trading, we call these open loops, right? It's basically a strong move. It's unfinished business. When they finish that business, when they close that loop now that kind of satisfies the buyers. Again, I can't buy up here because I have all of this resistance up there, right? It's not a breakout yet. It's just a nice completion of that, basically a retest of that high. When that happens, the range is still a magnet. I'm very bullish still though, right? Remember, so you got to respect momentum. Buyers try once, you got it. Buyers try twice. Don't forget, draw that low like that, up around that high, bingo, right? And it may also, too, end up looking like this, right? Where it goes 1, 2, and same idea, right? Remember the same idea back here, right? We go slim and lower, 1, 2, trap, right? To avoid selling too low. Could easily happen there, too, right? We go up, take the highs out, 1, 2. I don't want to get too aggressive on that short, right? I'm not trying to sell low. I'm trying to sell high, and that's where those traps come in. So again, there's a lot of variations of those failures, but the key idea here is they take out that high, buyers try once, buyers try twice, mark up that low, mark up that high. If I can get into this thing at a pretty good price, I can grab it off the top of that channel. If it does come up and back in, 1, 2, trap and go, because again, that will allow me to sell high without selling too close to that range or chasing the market right as it goes lower. Now, of course, I'm sure you're wondering, okay, so how do we trade a breakout, right? Breakouts are part of ranges, right? Breakouts are, well, they're not going to be easy to the downside because even as we go lower here, we're going to have to see, basically, we're going to have to see here a strong move down. They're going to have to hold that pullback and break out again, right? If they can do that, where's the next level down here? The weekend gap. The whole week began right there, right? 1844, 1845, let's call it. Again, does not look like it's going to be very easy for these buyers right now because this big range that's pretty much been there all week this week, right? So if we do get this thing to go strong, move down, if they can hold that pullback and break down, by all means, we can definitely short this thing, but I'm not going to want to short that first pullback, though. That first pullback is great for a failure going back up into that range. 1, 2, 3 breakout, mark that low, you got it. Mark that high, and sell short. The first pullback is always the best pullback, right, up top of that channel. Weekend gap could easily get hit there, again, if these buyers can lose control. My biggest challenge, of course, to the upside is I don't want to buy into those highs. So, of course, 2 breakouts going higher here would be a 1, 2 trap. Let's go up. 1, 2, 3 breakout first, right? 1, 2, 3 breakout. Again, if those buyers can hold that pullback and run, you get 1900 overhead, and then literally there is a ton of space before 1925. 1925 is the next big milestone here up overhead here. So 1900 definitely does look attainable tomorrow, especially with some Fed speakers, some inflation reports tomorrow morning, right? Jump up. Doesn't need to be a crazy strong first leg, but they've got to get some strength off that second leg. Once I get that 1, 2, go, 1, 2, 3 breakout, mark that high, right? Mark that low. And we're getting aggressive on whatever entry pattern we can find off the low of that channel. A 2-try trap or a 2-try breakout would be okay, but you've got to see a lot of strength in that first move, right? First leg up, very strong, shallow pullback, higher high, that's still a pretty good trade there. But again, remember, on a 2-try breakout, 1 try, 2 try, on a 2-try breakout, that first leg has to be a ripper, right? It's got to be very, very strong. It's got to basically push back all those sellers. This one requires a little bit of experience, right? It's going to know how strong is strong enough, and obviously we'll fill in all those blanks tomorrow morning in our trade room. All right, guys. So very kind of an interesting chart here on the gold. Would love to short off the highs. I would also love to buy off the lows. Be very careful trading breakouts underneath this range tomorrow, and be open-minded for breakouts going higher here because again, inflation's on the rise. Gold obviously is something we'll respond to that as well in most situations. So we're watching that tomorrow morning in our trade room. Speaking of the trade room tomorrow, tomorrow morning, 8 o'clock Eastern time. I can't believe how fast fast. This week has flown right by. I would love to have you there, right there with me. I'll put all of the membership information you guys need, all the join up links. I'll put all of that in the description of the YouTube video. I'll put a big button for you guys too right below me tonight on the trading blog. So don't be afraid to grab that button. Get registered. You can do everything on our website or just simply call me. I'll be here. I'll be here the rest of the evening tonight. I'll be here tomorrow. And of course, I'll be here to answer all your questions, help you get registered, and we'll do it together tomorrow morning in our trade room. Don't be afraid, again, to use that live chat button or call the office or drop those questions in the comments section right below me tonight on this video. Guys and gals, I missed you last night. I'm sorry to leave you hanging last night. Trust me, I would have been much happier been here with you guys last night. I was stuck in meetings all afternoon, yesterday afternoon. But that's it for me tonight, though, guys. We'll make it up tomorrow morning, 8 o'clock Eastern time in our trade room. Hope you learned a ton here today. Hope to see you tomorrow morning, and we can do it together. If not, have yourself a fantastic Friday. Be careful late in the day on a Friday. Remember, don't forget, early in, early out on a Friday morning. Happy OPEX, and I'll see you guys, if not tomorrow morning at the opening bell, I'll see you guys back here next week for a full week ahead of us next week for our nightly newsletter. That's it for me, guys. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.